Hey, good afternoon. This is Neil with Simpler Futures, found at Simpler Trading. And today is Wednesday, hump day, 15th of November. So it sounds crazy. We're already halfway through November. Amazing. Thanksgiving right around the corner. Time flies. But as far as the S&Ps here, clearly the price since I was with you last has continued to advance. I guess the low of the move was in last week, and it's just, it's just continued higher on this recent data that we've gotten that included some Fed speak and CPI, PPI. We've got Walmart earnings tomorrow, and then building permits on Friday with the options expiration. So line in the sand right here is 45, really 20, just call it 20, 45.20. It's 17 is an old, you can see it on the left-hand side of the screen over here, this MCV POC, but it's, if you want it to the tick, it's 17, but it's easy enough to loosely refer to it as 45.20. So that's your if above you're leaning long and below you're leaning short. I prefer a little retracement, to be honest with you, but that you have to. It's the old tie goes to the runner. You got to give the edge to the bulls because clearly, they're doing what they got to do to keep this thing together for now. Seems. We've been off a long distance in a very short period of time, but we're here, so it is what it is. Long targets between now and when I'm with you again. Well, it's tomorrow night. Yeah, I do videos tomorrow night. So long targets are 56 and 83 on the top, 45, 56, and 83 in the futures. And then any failure at that 45.20 that starts to come in and roll, we're going to target 44.92 and 64. Those are old end of quarter settled prices. I like the 64 down here. It would get it to the middle of this gap. There's gaps all over the place now. This is getting kind of crazy. I mean, there's a gap from this 84 all the way down to, call it 30, basically. There's another gap. Well, let's see. I got the plan here. Let's see. There are gaps all over the place. There's another gap. There are 84s down to 30s. There's a gap down into the CPI print of this last CPI. This is kind of crazy too. Look at where we are back up here at 45.08. We're back to the August CPI report. And the last quarter, Q3 for this year, settled at 44.92 in the ES. We're back above that. So we're back. We're back. I mean, this is, this month opened at 4,200 and just put a high in last night at 45.41, right? It's 300 points. Well, the 4,200 open and low, and the high came in last night at 300 higher at 45.41. It's impressive. So it means you got to give the edge to the bulls. It means that we could obviously see a retracement at any time, but it means that we're clearly in buy the dip mode, and that's why I give you the levels, as targets on the way down, but those are also levels to look at. Not only just target, but you look and see if price can hold there for, a turn back up and make another, high for the move. Why not, right? I'll say again, I was early in getting long before the low at the end of October. I got long a couple weeks in front of that, which made me early. But I was clearly, at the time, looking for a low in October because it just always works that way. I mean, people complain about October, but it's really September that's usually bearish, and October is where a low is found somewhere. Happened to be late this October, but the purpose for that and saying it is, with that intention at that time was to try to get long, be long, hold long through the end of the year out into, at a minimum, I mean bare minimum, at least the January options expiration. I honestly am not going to be surprised to see it be even further than that into February OPEX. And so when I picked up swing longs in October, darn near the low, but when I did, I was looking at that time. We were making this plan in the trade room, so anybody that is watching this from a trade room, you know. But it was with the idea that, you know, we're going to start to look for longs that we have in mind holding well through the end of the year. So that means any of these dips, any of this retracement stuff that we're talking about, it's by the dip. It's by the dip. And we'll let the market decide how far it wants to go. I'm not going to try to tell it where to stop. I mean, frankly, I would have imagined 4,500 was enough, but clearly that's not true because it 45.41 last night, right? So who am I going to be to try to tell it where that's high enough? And that's clearly, evidently not. You know, it just keeps going. So that's why I give you a line in the sand. It's 45.20. Targets on the top are 56 and 83. And if it bumps its head on that, starts to come in and roll, look for 92 and 64 on the bottom. 44 handle, 92 and 64 on the bottom. That's it. That's what I got. Hope it helps. Good trade. We're going to be doing more with, like, I'm gonna be looking at gold here pretty soon too. I'll tell you, a little lower, maybe $1,900, but along there for a big move back to new highs for the move, over and above the last 2,000 plus high. So that's gonna be another one. And I'll kind of be watching for something in crude for us also. Basically, all roads lead to $80 in crude until they don't, because that's the midpoint on the year and the volume kind of point of control for the entire year as well. So even if that support needs to come from lower, that support will be 72 if it needs to. That'll be a 72 bounce up to 80, but then above 80 would be bid for 89, with all roads leading to 80, right? So you got 72 support, 80 as the magnet, and 89 as a long trigger if above 80. And that's it for now. I hope it helps, and you guys have some good trades out of that, and we'll be together again tomorrow night, I guess. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me